All right, welcome back to eXp Realty Minnesota. I'm your host today, Justin Campbell. I've got Ben with me here today, and we are going to find out what the heck is going on with interest rates. Ben, welcome to the call.
Thanks, Justin. Appreciate you having me, man. Excited for the be able to talk about this stuff.
Yeah, right. We talked a little bit about how unexciting mortgage conversations can be, right?
Yes,
It can be a little
yes,
nerdy. I think the big thing
yes.
is I made a mistake last week. Well, I guess I didn't make a mistake, but I was talking about how the Fed had cut the rate down and that I thought rates would come down, but I wasn't, I knew it may not be that day. It may be later, but I don't think I clarified that. So maybe you can help me clarify that a little bit.
Yeah, super common misconception, even with loan officers that are newer in the industry. So the Federal Reserve, think of them like bank to bank lending. That's what they do.
Mm-hmm.
So what they did is they cut the bank to bank, like overnight lending rate between banks a 1/4%. So what that affects is very short term interest rates. Like think of like your credit card interest rate, maybe like a short term, like an auto loan, or like an adjustable rate mortgage, or like a home equity line of credit, or the two types of mortgage that'll directly affect. So in preparation for that, because people that invest in mortgages because of their bonds, not kind of unlike what this is. What they did is they dropped interest rates because they knew the 1/4% was coming. But some people that invested in interest rates said, hey, we think it might be more like a 0.5% or maybe an eighth of a percent. So there was a little bit, and it typically happens before Fed rate cuts, is maybe a little bit of a push lower than what was expected.
I see.
So
More of an
yeah,
anticipation. But
yes.
but I mean the general indicator is that we can believe that rates are going to be coming down in the near term.
So mortgage rates are kind of different than every other type of like lending product out
Hmm.
there because we lend oftentimes for like 30 years. So we look at different numbers. So we look at more like economic numbers like inflation and job reports, then
Hmm.
that's how they dictate mortgage rates. So long story short, without going too far into it, because
Yeah,
Justin, I could talk about it all day
yeah,
if you
we could.
wanted. We don't want to do that though.
Yeah,
Probably going to be sitting here for the short term. So people that are looking to take advantage or like, hey, like what can I project out? Yeah, over the long term, if the economy stays slower, if GDP keeps coming down, if we see the effects of tariffs really affecting like jobs and that kind of stuff, definitely I would expect us to go lower. Hard to say, in the short
yeah,
run, of course.
yeah. All right. Well, I think that, I mean, that's basically where I was at with it. It seemed like there was a lot of varying news that came out. So thanks for clarifying that. If somebody, one of the things that I noticed was that the 15-year rate looked fairly attractive on paper. Is that accurate? Is that a good way to go?
Yeah, 15 years. I mean, if you're looking at going shorter on your mortgage or if you only have like 15 years left, usually I don't advise to reset back to 30 unless you're looking for a tremendous amount of payment savings.
Yeah.
15-year, 5.5%. I mean, that's a great interest rate right now. There are some adjustable rate products if you are a little more comfortable with being uncomfortable, or
Mm-hmm.
if you're only going to be in the house for a very short amount of time. Those can be a good deal right now as well. Those are oftentimes in the fives with most govy loans. So like VA, FHA, USDA are all in the fives as well still. We're still almost a whole percent better than we were even like 6 weeks ago.
Mm-hmm.
So it's definitely moving in the right direction. Well, we'll see kind of how it plays out from here.
Yeah, I thought the 15-year, I was like, wow, that might actually be a tool that I could use for myself to acquire properties, pay them off before at my retirement date, basically. That's what it looks
Yeah.
like from where I'm sitting. I'm like, holy crap, if I purchase a property and do that, this house will be paid for. My house will be paid for it the day I retire, which would be, I think, a great opportunity for myself. What is some of for like the grade A loans that you're doing? What's like the minimum credit score that's coming in that clients can currently expect for rates?
So to get like the top tier interest rates for a conventional project, you typically want to be in the sevens, 700 credit score.
700. What about 600, 650? What are most of your approvals? If you're going to do an approval, would you say 650 is something you see commonly, or you think
Very
700?
common. Yeah. So it depends on really the client and it depends on the actual what their objective is with it. But so FHA and VA and even USDA are very lenient on credit. They'll allow down into the 500s even for credit.
Okay.
And because they're government backed, they're actually going to have less penalties for credit. So my first mortgage was an FHA mortgage because I was not a perfect credit score. So very common. And they actually can give you better deals and higher pre-approvals with those as well.
Okay. Another question that comes up a lot is, should I sell it or should I refinance and improve it? Kind of, like, should I sell it or should I refinance it, right? So is now a good time? Are we moving into territory where people can start considering refinancing, where there'll be some value to them?
Yep, I would say anyone in the sevens right now is a good time to look at it. It may make sense, it may not, but that's going to really depend on how long you want to live in the house. So that's where you want to have a good loan officer that's going to explain that. But at the same time, you also want to have a really good realtor like yourself that's going to be able to explain that side as well. It may make sense to have the loan, do those improvements, and hey, maybe you want to stay in that school system for 10 more years. It's going to make a lot of sense to refinance that and do that.
Today, if you're if you needed to recapture some of that equity for some reason, is that what you're seeing more of, is cash out refinances rather than people trying to buy their rate down or trying to get their rate a lower rate?
Depends. I mean, I'd say it's kind of split right now. With inflation and everything being kind of like pushing more pressure onto people's day to day. Sometimes you can take, if you have equity, you can pay off credit cards and other high interest debt, and you can save yourself thousands and thousands of dollars a month. Like, no joke. I've seen
Literally,
it.
Yeah.
If you're not in that situation and we're like, hey, I'm going to stay here for 5 more years and we can find something that's going to recoup those kind of costs for the mortgage within a year or two, you're saving thousands and thousands and thousands of dollars in interest saved over just those couple of years potentially.
Every year, and if you have like a 3-year car loan, every year you're at $500 car payment, $500 every month that's coming out. That really starts to add up when you incorporate how much it is actually just interest on debt that you're paying. So definitely something to consider. How available are you? Let's say a buyer wanted to talk with you. They were thinking about selling, they wanted to buy, whatever it was, they want to talk to a loan officer. What's your schedule like, hours, kind of first step if people wanted to learn more about having you help them?
Yeah, great question. So I work 7 days a week. There's very rarely I do take a day off. So this job is like, hey, when I'm needed, that's when I'm available. So if it's 1 a.m. on a Saturday, I probably won't be available. But you get my voicemail and I can follow up with you the next morning. Feel free to shoot me off a text. And that's just how this industry works, and that's how you work, Justin. That's just how we do things. We have jobs where when we're needed, we're here to move fast and move quick and get you the information you need.
Awesome. Well, I think it was a great video. If you got some value from this video, reach out to Ben. I'll put his contact information somewhere in the notes. Thanks for coming on, and hopefully we'll do another video here soon.
Love it, Justin. Appreciate it, man.
Thank you.
Have a great one.
You too.